Putin pushes, markets stall, and the collector car market is going crazy. Let's talk about it. Hello, everybody. Joe Warbeck coming at you. And Vladimir Putin is really pushing this deal in the Ukraine. And I'm not going to get into the finer points of what it means for soldiers, what it means for those people living in the Ukraine. We're going to talk about the financial repercussions of a possible war with Russia in Ukraine. What we can see, and again, this is not me being emotional, so please don't take what I'm about to say the wrong way. Historically speaking, conflicts, those in the Middle East, those in this eastern part of Europe, have not harmed the market long term. As you can see in this chart, if we take out the outliers like Pearl Harbor, which was a massive conflict that we had here in the United States, we can see that on average, markets fall for a few days, they recover within a few days, and the downturn is nothing for us to worry about long term. We call these events black swan events. These are events that hit us, blindside us, scare us for a short term, but then markets recover. So what do we take away financially from the issue in Ukraine? It's that we don't think this is going to affect the markets long term. If there is an invasion, if there is an outbreak of war in that area, over a few weeks, the market should be okay. So I would not want to see people freaking out and selling off if this does come to a confrontation. It's bad for the people. It's bad for our soldiers. Economically speaking, for your money, you should be okay. But the markets have not been okay. As we can see, we did have that sell-off through about January 27th. We did have a recovery that was actually performing very well, and then another downturn. So what is causing this? I think this has to do with some of the tech companies that have just been obliterated over the last few weeks. If you were a follower of my channel last year, I talked about FANG'em a lot. Facebook, Apple, Amazon, Netflix, Google, Microsoft. These few companies at one point represented over 20% of the S&P 500. They're still around 19%. And when something happens negatively to one of these behemoths, it has an overall negative impact on the entire stock market. Take Netflix, for instance, that just a few weeks ago lost over 40% of its value. Basically, 2 years of its returns were wiped out. And then last week, it was Facebook or Meta, whatever you want to call them. They were down 26% in a single day. They're now down over 33%. When that happens to such a large company, it has reverberating effects throughout the entire stock market. So things were looking good. And then Facebook said, well, we're going to continue getting users, but maybe not as many users as we thought we were. And they crashed and burned. Should they have lost 26% in my professional opinion? No, it was ridiculous. It was uncalled for. I'm not telling you to invest in the stock or not invest in the stock. That's not what we're about on this channel. I just want you to understand why the recovery stalled. And let's talk about the collector car market. This is a fascinating area for me. In fact, I was lucky enough to be at Barrett-Jackson's sale out in Scottsdale just a few weeks ago. And I find it interesting to see where are wealthy people putting their money. Right now, they're putting it into collector cars. So back in 2020, Barrett-Jackson had the same auction at the same place in Scottsdale, Arizona. They sold about 1,900 cars, and they had sales of about $130 million, which is just insane to me that you can sell $130 million worth of cars in 1 week. But this year blew that out of the water. They sold 1,854 cars, almost the same amount they sold back in 2020, but they had sales approaching 200 million, or close to a 53% increase in sales, which is just insane. Does that mean that those cars really have gone up in 53% in value? No. What it means is people have money. Remember, we created over $4 to $5 trillion of cash last year. Some experts are saying over 40% of all the money ever printed was printed last year, which is just insane when you think about it. And that money gets distributed across the country, but then where does it go? It flows up to the wealthy people. It flows up to the business owners, the people who are smart enough to create businesses that make you, the average consumer, want to give your money to them. And those people have a lot of cash. There is still $4.5 trillion sitting in money market accounts. and they're sitting around going, okay, stock market had 2 great years, 20% returns in most of the indices over 2 years. I don't know if I want to keep putting my money in stocks. Real estate has blown up. Maybe I shouldn't put my money in real estate. So where are they going to put it? They're going to put it in collector cars. That's another asset class, which is different. And it's actually, again, I'm not telling you to buy collector cars, but it is a non-correlated asset. What does that mean? It is an asset class that is not 100% in unison with the stock market. So if you want to diversify your assets, which you should diversify your assets, buying 2 or 3 different mutual funds is not diversifying your assets. You want to put your money into assets that are not correlated. What does that mean? That means that if one of those investments goes up, you don't necessarily want to see both investments going up. And if one falls, you don't want to see both of them fall. You want to see them performing differently at different times with different market conditions. That means you're not 100% correlated and you're diversifying your investments. So we saw some massive diversification. And what's really cool about collector cars for those people who have the money to buy them is you get to actually enjoy that investment. You get to see it, touch it, maybe drive it. When the money is sitting in the stock market, it's fun to look at, but you're not, driving it around and having fun with it. So to see just people spend the crazy amounts of money that they were spending on cars tells me that this economy is not nearing failure. It tells me that the wealthy people feel comfortable enough to invest their money and they're not hoarding it as much. This is actually a positive for me. Does that mean that the stock market's going to shoot straight up this year? No, that's not what it means. But it tells me that we are not nearing a depression or a recession, that things could still perform well in 2022. Not as great as they did in 21 or 20, but I'm still positive for the year. If you like videos like this, make sure you hit that subscribe button. Make sure you leave comments down below. I read every one of them. I appreciate every one of them. Give me ideas for future videos. Turn on the notification bell if you'd like to be notified when I come out with new videos, and I'll see you next week.